A lot of traders overlook a key habit that can dramatically increase their chances of having a successful trading week. As someone who trades while working a 9 to 5, these three things I'm about to share with you are a non-negotiable for me. And if you add this to your trading routine, it will give you the best shot at showing up prepared and trading well. Before I show you the three things that I do every week, I'm going to explain why preparation is important. Preparation reduces the emotional decision making under pressure. Trading is a high performance activity. Like, you want to reduce the amount of emotional decision making that you want to be able to make it as systematic as possible. So when you prepare, you're able to know, okay, what is the trend? What is the market doing? Is the market trending higher? Is it trending down? Or is it just simply chopping around? It also improves your risk management when you're entering the trade, when you're exiting the trade, if it's invalidated, where you're taking profit. And then you're going to be able to avoid bad trades and bad setups in general. So the three things I do are technical analysis. I look at the news and red folder economic reports and earnings reports. Those three things are critical to my weekly preparation. First things first, I'm going to show you how I approach my technical analysis. Step one, I look at the weekly time frame. So the weekly time frame and the daily time frame and the 1 hour are saying the same thing, meaning we are in an uptrend. That means there's alignment, and it means that that week would probably be easier to trade. Same thing for downtrend. If they're all in alignment, like the weekly time frame, you're making higher highs and higher lows, and on the daily time frame is the same thing, and on the hourly is shaping up to be the same thing, you're most likely to take winning trades if you follow your plan. But the issue now comes when you have your weekly time frame and your daily time frame and then your hourly time frame are saying completely different things. Because with these time frames, right, candles form on the 1 second and then it builds up to the minute and then the 5 minute and the 15-minute time frame. When something is happening on the 5-minute time frame, it takes a while for it's fully reflected on the 15-minute time frame, and so on and so forth. So when you look at your weekly time frame and your daily time frame, and you're seeing that maybe on the hourly, it's screaming, oh, it's bearish, trend is changing, and we might see more downside. But on the daily time frame, it's still showing that structure is holding. You want to exercise caution and maybe either size down or you just sit out and wait for clarity. When there's no time frame alignment, we wait. We know that that week we're not being aggressive and we're being gentle. What I like to do is that I mark up my trading view charts like this. I mark my levels on the hourly time frame. If you want a video showing how I get my levels, let me know in the comments and I promise I'll make it. Because I primarily day trade the first 90 minutes. I get my levels on the hourly time frame. I know most people say, oh, look at the 4 hour. I don't look at the 4 hour. And my levels are pretty accurate. So I mark up my trading view charts with different scenarios based on what the higher time frames are telling me and what the price action was the past week. So that helps me prepare different scenarios coming into the following week. The second thing I like to do, which is very important, is look up the news that could happen, drop that week, or the economic reports that could be released. I like to go to Forex Factory. That's the name of this website that I have on my screen right here. What I do with this information basically is to let me know what times red folder reports are the ones with the most significance. They're very important, and the orange ones are also important, but not as important as the red ones. I try to avoid being in trades when news drops. For example, this coming Thursday, you can see at 10 a.m. Eastern time, there's going to be existing home sales. It's a yellow folder news, but sometimes it could move the market. What I try to do is I don't enter new trades 5 minutes before red folder news drops. If I'm already in a trade, I would make sure I'm out of most of my position right before that news if the setup is still valid. If not, I just exit and just wait for the market reaction after the market reaction after the report drops. Like days where you have FOMC minutes or Powell is speaking, Powell is the Fed chair, you want to avoid trading during that time. If you're trading during that time, it's just pure gambling, in my opinion. So that's why I try to look ahead of time and plan my week. If we have reports like CPI, GDP, they tend to move the market a lot. And sometimes if they're dropping on a Wednesday or Thursday, the price action in the market on Monday and Tuesday might be choppy, or you won't see a lot of high probability trades. So it's best to either size down or just skip it. If you have a small account, you want to skip those days, honestly, because it's not worth your time, and just wait till that news has passed and you've seen the market reaction, and then you can trade with the trend. The last thing that I check for, usually this is kind of a bit optional because there's earnings season, but during earnings season, every week I look at the calendar and I see which companies are reporting earnings. If any of the tech names that I trade are reporting earnings, I try to avoid trading them the day they are reporting. For example, Nvidia is reporting earnings on this day, Wednesday, November 19th. I do not plan on touching Nvidia because I trade options. That means that IV, implied volatility, on the options contract will be high. So it won't be worthwhile. It will be, one, the contracts will be expensive, and it might not move much even if you get the direction of the trade. But if you get it wrong, oh my, you lose a lot. You lose a significant amount of money. It's just not worth it. Just trade something else. Look for something else to trade. With that being said, these are the three things that I do every week to make sure I have a good chance at having a great trading week. A great trading week is when you make a good plan, you come in prepared, and you execute that plan. Win or lose, you feel better because you feel prepared, you feel empowered. You won't have to wait for any trader to tell you where the market is going or tell you when news is dropping or guide you. You feel more empowered, you feel more confidence, and you'll be able to manage your risk. Thank you so much for watching this video. I hope you found some value. Let me know in the comments if you have any questions. I'll be more than happy to answer you. Until next time, thank you.